On the call this morning, Moody's downgrades Japan's credit rating, causing the Nikkei to fall over 2%. Moody's also downgrades Japanese banks. S&P futures are also negative, down almost 1% on the Japanese downgrade and profit-taking. Markets await Ben Bernanke's speech on Friday in Jackson Hole, Wyoming, looking for any signs of monetary easing. I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Riley, Chief Strategic Officer with T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Scott, happy Wednesday. We got to break down these markets. We had a crazy rally yesterday, and you mentioned before we got on air that IBD put us back in a confirmed rally. What does that actually mean right now?
It means different things to different people. To me, I think it's very important. If you recall, back in late July, they put the big picture in a market correction, meaning technically we were getting weaker. That was around 1305. We went down to 1101. That saved yourself 200 handles, in the S&Ps, probably, I don't know exactly what percentages, but about 8 to 12%. Now, when they put us back in a new confirmed rally, it doesn't mean it leads to a major bull run, but none have ever started without one. And yesterday constituted a follow-through day to the the August 8th reversal, which I want to show you real quickly on the chart. So this is what I'm talking about. Here is where they put us in market correction when we started to get some distribution within here. So if you sold there, you did pretty well. And now, this was your day one. This was that, I believe it was August 9th, when we hit 1101, reversed up, gave us a small move to the top of the range. And then yesterday was up over 2% on a heavier volume. They put this in as a follow-through day. That gives you a green light to get a little bit more than a tier one, but not a green light just to go balls to the wall all in.
Well, I was going to say, just because it says a confirmed rally doesn't necessarily mean that we're going back to a full-on bull market. I mean, that rally could last just a few days, right?
Yeah, well, what you want to see is you don't want to see distribution days right after you get into a confirmed rally. And obviously, yesterday, we were up 330 points. The futures are down this morning. So a constructive day would be is if we can go from negative to positive today and go up a little bit. That would be constructive.
And if we stay negative?
If we stay negative anywhere 50 to 80 points, it's no big deal. It's still the top third of yesterday's move. What you don't want to see is you don't want to see us all of a sudden down 200 points today and pretty much take back the constructive nature of yesterday. So you don't go all in now, but this gives you the window to start adding to your macro tier one positions if they acted well while we had some more of that choppiness in this lower pivot.
Does it worry you at all that yesterday's rally seemed to be on relatively no news and actually in spite of some disappointing macro data?
It felt like the buying pressure was there. It tried to go the previous day, and then sellers just sold it. Yesterday, I saw key stocks acting well. I had a little short on the brain yesterday. Okay, I was thinking we were going to break the lower end. This was the same thoughts everyone had last summer, but when the spiders came in and you saw Apple that was up 4, not pull in to go up 8, and Baidu and Amazon, and you saw that there really wasn't any worrisome, the banks weren't falling apart. Yes, Bank of America and Goldman didn't participate, but it showed you that we could reflex off this level. Now the question is, can we build?
Right.
Will we get some, bad news out of Europe all over again? And what's going to happen on
Friday? We're still
Friday?
getting bad news out of Europe.
Right, well, whether it's priced in or whether it's extreme.
All right, so then talking about